Hello everybody, Jackson here with the Wealth Squad. Today we'll be talking about three tech/growth stocks that are down considerably from highs, and if you're looking for a rebound in the growth markets, then these stocks are the right picks for you. Uh, we're going to start off with Roku, the biggest of the bunch, and let's draw some support and resistance lines here. I'm going to change it to the year. Zoom out just so we get a more accurate picture of each candle. I guess that looks about right. So you have a heavy support at that 176 mark, heavy resistance at the 485. That's a huge gap to be trading, right? You're looking at 175% down upside uh, and a 63% downside. So right now, of course, Roku is at the bottom of that range. We are right in the 200s. And let's just look at the performance recently. So back in July, you can see Roku at 480, 490, approaching 500. Right now, we are at 223, down 54% from the highs in around half a year. So Roku is one of those stocks that have been slammed lately, but you could see, right, for the past 3 years, they have surpassed every earnings report estimate, right? It's not a failing company if they're beating estimates. However, estimates could be slim compared to others, or, they could still be losing money while beating estimates. That's probably the case. So you can see this is actually estimate was 6 cents of earnings, and they reported 48 cents. So they did make money in the last quarter. So it does look like Roku is usually profitable, right? You can see the estimates are negative, but they've been beating them. So Roku is turning profitable, even ever so slightly. It's still better than losing money, right? So that's a big thing going forward for this company, is generally just earning a income, right? You don't want to be losing money in buying the stock, and unless you're trading it. Trading it, stocks could be traded, and they don't even have to be good investments. They don't have to be good companies. As long as it's a good price and a good entry, then you could trade whatever you want. For an investment, right? You're holding for years, then you want to look into the company. If it's a trade, then necessarily weeks or months. It usually just goes with the market or with the rebound of the specific stock, not necessarily the fundamentals. So looking at Roku, we're looking at trading it, we're looking at the chart. If we were looking at investing and holding the company for years, right, we would be looking at the balance sheet, income statement, that type of stuff, but we're not. So not much going on in terms of the technicals with Roku. Looking at the 5-year chart, it's a different story, where you can see the MACD is starting to line up, and we have yet to see confirmation, but it does look like that is going to be a possibility here soon. RSI is relatively low, not below 30 anymore, but this is one of the better off stocks out of this bunch. You can see we're off from the high, right? Sorry, from the low of 188. We're now at 226, so we're off 40 bucks from the low, which is pretty good compared to the others we're going to be looking at here today. But Roku is the biggest of the bunch, has had some tough times lately. Doesn't have an income or earnings report coming out anytime soon, just in 2 months. So it could be a good time to get in, considering the stock is down, 60% from the highest range, right? Or I'm sorry, like 50 something, right? So keep Roku in mind, add it to your watch list. Next, we'll be looking at DocuSign. So you can see a large drop in DocuSign. Let's add some support and resistance lines here at 315. That's the all-time high. Right around the COVID high before COVID, 93, and lowest of the range right around 182. You can see that pretty evident here. But looking at the last month, you can see a huge drop from a bad earnings report, right? Whenever a company falls like this, it's usually due to earnings or something going wrong within the uh, CEO or CFO or board of directors or a merger. Something pretty big needs to happen for a large company, a $30 billion company, to fall 40% in a month, right? Or just in one day. We can see the earnings report here. They beat estimates. Um, what the estimate was 46 cents, reported 58 cents, be on revenue as well. So something deeper has to be going on within the company. Um, and it has to do with, I'm sure the laybacks of everyone going back to work, no one necessarily sending documents online, and that's what DocuSign did, right? You had to sign papers online. DocuSign was there to give you those papers. I've used them before personally. However, with more people going back to work, it may just be that they're not getting enough business as a year ago, right? But if we're looking at another quarantine or lockdown, then DocuSign and Roku actually may be good picks. But when a stock falls 40% a month, you got to look into it because it's crucial to buy that big of a discount. Now let's look further on the year. You can see the MACD very bullish because it is confirming a reversal, right? As soon as it dropped, you can see the MACD momentum starting to reverse, now in the green, blue on it over the orange, RSI right above that 30 mark. Definitely a good entry for DocuSign right here at that 150 mark, considering a month ago was at 250, right? Looking at a very big upside. So yeah, DocuSign, another very good growth play to be looking at right now. Lastly, we're going to be looking at Peloton, a stock that has been crushed lately, literally crushed. We can check past year, scroll out, literally sitting at pre-COVID highs, right? Before this company made all this new money, before getting all these new customers, before it sold all these new products, it's sitting at the same exact price as it was back then. Now, if you're looking to, think that COVID's done, then maybe don't look into Peloton. However, if you don't think that COVID is entirely gone, which it doesn't seem like it is, and it's starting to come back, maybe in waves or even harder this time, then Peloton is a pretty solid pick. With a high of 170 and a low of 37, sitting at price of 37 right now is huge, right? Considering we're at 170, we're down almost 80%. It looks like the company, like from this perspective, down 80% in a year. It seems like the company's like gonna fail, right? But I've learned that companies don't fail necessarily easy. They always try to bounce back. Right now, Peloton's sitting at the low of the year, the 52-week low. I doubt, it's not gonna go bankrupt, right? It's a growing company and has a solid product, solid customer base. Now, what you want to ask yourself is, could it go lower? At this prices, of course it can, right? Anything could go lower. However, the chances that happen is slimmer than it was a month ago because it's just been falling ever since. I feel like picking up shares at the 37 mark, at least a starting position, is a solid risk to reward ratio. Maybe you don't, maybe you just have to look into other stuff. Maybe you want to invest in this company and look into the income statement, balance sheet, the new products coming out. But I'm looking at the chart. I want to trade this stock. So Roku's another one. We're looking at $20 off the all-time low of Peloton. I might have said Roku. I meant Peloton. Huge COVID play in the past, maybe again in the future. So watch out for these three stocks. Looking at Roku, DocuSign, and Peloton. I hope this video helped. I hope you add these stocks to your watch list and make some money from them. We'll see you later.